Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So let's see what else we've got before we try to get on over to the more current data here real quick, and I'll try to share my screen with you. I'll have to jump computers and share the screen that way. So basically, one of the keys that you want to keep in mind is that always watch your risk tolerance. Make sure you don't let your risk really slip away from you, because you can see here, for example, if I take a 20% loss on an option trade, the next trade, theoretically, I need to make 25% to get back up to break even from that first loss. That's not a bad gap. That's only taking 5 percentage points more. A lot of times we try to keep our losses in that range between 20 and 30%, because once it starts to slip away from that, you can see it starts to grow. A 33% loss requires a 50 percentage point gain on the next trade to make up that first 33% loss. And then, of course, a 50% loss. I know a lot of options advisors that will tell you, take the loss if it hits 50. Well, that's getting too wide in my point. You can see it's going to take a double on the next trade to get you back to even. And, of course, if you let it go beyond that, it really gets brutal on the power of compounding working against you. So really advise you to find these low-risk entry points and make sure that you're really sticking to that. And as I mentioned, the closing stop's really important to us as well. That, to me, our greatest enemy when we're talking about trend trading is noise. That, the noise of the intraday, the noise of the intrabar. I know a lot of people that will look at 15-minute charts, 60-minute charts. You can use this same method with acceleration bands and percent R on those time frames as well. Same settings. Just have to basically be prepared for the fact that you're going to get a little bit of a noise factor going on there. So you've got to factor that in, that the noise grows as you go to shorter and shorter time frames. So just be prepared for the fact that you're going to have to make more decisions and be very good at admitting you're wrong quickly and moving on the small losers versus, letting the other ones ride when you're right. So from my perspective, I look at this and I say, okay, what's the closing stop all about? Clearly in this case, we're saying the idea is that at the end of a bar is when I'm really focusing on saying I'm wrong, I've got to get out, only at the end of the bar. Because the idea is that most indicators are actually based not on the intraday action, but on the closing values. Like a moving average, that's based on the last, say, 20-period simple moving average, the last 20 days closes. So if I overreact to the intraday action and then haven't gotten a true close yet, how many times have you seen it where intraday you get stopped out with an intraday stop, and by the end of the day it's still hanging in there? You would have been okay to hang on to it. So for me, this closing stop idea gives me an uncle point to say, okay, guess what? It's a situation in which we're not seeing it work like we would expect it to. Guess what? We got to get out. But if it's hanging in there at the close, the other traders that got faked out intraday by the intraday stops, they're getting whipsawed, knocked to the sidelines, and then watching in frustration as it takes off without them on board. So this keeps me on these strong trends while still giving me enough of an early signal to get out that I'm not going to worry too much about something that maybe has a little bit of slippage between midday and the end of the day if it violates my stop. So on a daily chart, for example, I'd say use the price 15 minutes or less before the end of the day. So as close to the close as you can get, as near to the close as you can get, that if the stop is violated, I'm suggesting either place a market order or consider a limit order a little below the bid on an option to exit the position. Don't play that game of trying to scalp the middle on the bids. That's going to usually leave you kind of stuck in something that's not going your way when it's time to get out. So this really helps me to be disciplined. Here's an example of after British pound had a real nice run to the upside. You can actually see the first bull confirmed signal here happening as we break out above those bands, and then 2 days later get a confirmation. That's the first bull move. Then you get a nice retest coming in. Notice you'll see a couple of times where we call these bend but don't break signals, where you try to break underneath it, but this is where the closing stop saves us, and you close back above it. You're staying with that trade there in late December, and then it keeps on trending up. Your next retest, of course, is going to come in right in this area in mid to late January, and then it is going to violate there. So you're going to say, okay, goodbye to the rest of the trade right there. You can see how these bands are working. Then we had moved from a little downtrend that we had working here as we broke down right in this level to be exact, and then we got a little downtrend in the British pound, but then it started to snap up. Usually speaking, you want to focus on which ones are giving you the best moves on the upside and the downside. So something like AUX right now, clearly prefer to focus on that because BPX has been relatively trading ranges. When it's stuck in between those bands, look, you see what's happening here. You're moving back into the bands contracting. We call that volatility contraction. You're basically stuck back in that range. That's where you could look at the iron condors, doing credit spreads on both sides of the market, betting we're going to stay within those bands. Give yourself a little bit of breathing room, a little bit outside those bands. So I might say more like, a 51 to 49 range in this kind of a case, and basically set my short premium strikes up in that range. Short, 51 call, maybe buying the 51.5 as a credit spread, shorting the 49 put, buying the 48.5 put for protection, creating a put credit spread there. So that's a way in which you could do that and generate premium in a sideways kind of a period. This was the older data on the Aussie. We were saying that we were watching that one, but you can see in this kind of a case where it starts to go overbought and then it fails, that high doesn't get taken out, and now it goes back underneath our overbought level. So in that kind of a case, I'll actually say just turn off that signal and wait for the next setup because it's not staying overbought. So that was when, as Steve was mentioning, when that one came out, it was a little bit later than some of these original ones came out, but it's since then been a very good trader. So what I want to do is actually this is an old URL, so I'm going to actually tell you, just email me and I can get you a free trial of our popular net letter. And so just feel free to email me. I'll just type in my email address here on the chat here, price@bigtrends.com. It's a pretty intuitive one, easy to remember. What I want to do is I want to show you exactly how to go evaluate the current market. So what I'm going to have to do is I'm going to have to hop over to my other computers. Let me see, Steve, if this is going to work real quick.
You know how to do it, right, Price?
Yeah, let me just see if I can just pop over, click on that same link here, and pop over. So 1 second here. And also, if we have other questions along the way, we'll also answer those while I'm just setting up my current sharing here. 1 second.
Yeah, I'm curious for your view on AUX because we saw a lot of vol shift in the last week, a lot more sentiment that the trend would continue, that the U.S. dollar would weaken and the Aussie would strengthen. So I'm interested to see, what you think there. And I think Euro's been a little bit, more. I guess it's been range bound, but
Sure.
That one's interesting.
Yeah, exactly. I mean, that's what I was mentioning on the charts is that the Aussie, the U.S. dollar has been so weak against the Aussie that it really has been a situation in which, you've got a pretty strong and clearly defined downtrend, and you don't ever want to try to bet against those downtrends. I just see so many people that they just say, oh, this is way oversold, I'm going to take a flyer to try to bet against this, and I just find that it really gets a lot of traders in trouble when they do that. So yeah, let me just, I'm just uploading here on this other machine so I can then share this monitor with you. So I don't know, Steve, if I need any other privileges on this other. I put it as price.
No, you should be able to.
Let's see if we can do it here.
Are you hitting
price
share
to,
desktop? You see that third column over?
Yeah.
Share desktop. Click on that, and that should, as long as you're in the right pane.
Yeah, it's just got me as an attendee down here. Look at price 2, Headley 2, and see if you can give me any privileges on that one here. Let me just
okay. All right. See if that. Let's see what happens there.
Appreciate it. Just had to.
It's a double header there, huh?
Yeah, jump over on computers here because my other one's not popping up my trade station properly. Okay. So 1 second. Right.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.